to another Millennial in-depth video. If you are new here, hit that subscription button below and turn on the notification bell so you get every single time I upload a video. Today we're going to be talking about target date funds. I am going to be focusing in on 3 of the reasons why I think that you want to consider to get into target date fund investing. I'm going to tell you exactly what a target date fund is in layman's terms because ain't nobody trying to get complicated up in this investing world. And then I'm also going to talk about 2 particular reasons why I don't love target date funds. I invest in them, but I like to give you both sides of the coins. So let's start off with what a target date fund is. When you go onto the Googles or the Morningsides or the Yahoo Financials, whatever it is, when you see a target date fund, it is going to have a year at the end of it. The reason that they have that year at the end of it is because that is when they believe that you are going to retire. So for example, I invest in a 2050 target date fund because that is the time that I will traditionally retire. Hopefully much sooner, right? And so in a 2050 target date fund, it is going to be taking on a lot more risk. And as it approaches 2050, so usually around the 15-year mark before that, so like 2035, right? It's going to start shifting and rebalancing into a more conservative investing style. So right now, a 2050 target date fund is going to have a lot more investment in stocks. And as it gets closer to 2050, it's going to have a lot more investing in bonds. Different providers will have target date funds that are set up differently. So one target date fund that's 2050 on Vanguard is going to be set up differently from a 2050 fund on Fidelity, right? So that's something that's really important to remember. 2 things that I don't particularly love about target date funds. 1, the fees. The fees have definitely dropped from where they used to be. Right now, on average, we're looking at about a $52 per $10,000 invested, which is not amazing, but it's not terrible compared to a lot of other fees as well. So that's something you want to keep in mind when you're investing in target date funds. You want to look at what the fees are going to look like. The second thing that I'm not too amazed by when it comes to target date funds is personal finance is personal. That is something I always stand on. Target date funds do not personalized for the individual. So they're going to treat every single person who's retiring in 2050 the exact same way. Whether or not I have higher expenses that I need to cover when I'm retired, or if I have family members that I need to take care of, that doesn't matter. A target date fund is a set it and forget it mentality, or set it and forget it investing style, and it's going to rebalance itself, not considering, individual people's circumstances. So those are the 2 things you want to keep in mind when it comes to investing with target date fund. Now, let's get into the reasons why you should consider investing in a target date fund. The first reason is if you are new to investing. DIY investing is it can be a little tricky, especially when you're new to investing and you're trying to learn the new terminology and learn what this means and do all these certain things. And it can become overwhelming and frustrating really fast. So instead of, becoming so overwhelmed, a target date fund is a great introductory step into the investing world because, like I said, you can set it and forget it. You don't have to try to figure out how to pick different things. Once you invest in that target date fund and whatever year it is, you are really good to go until you start, learning a little more, and then you could do things on your own. So that is the first reason you might want to consider it, right? The second reason is it gives you diversification without you having to worry about picking out individual stocks and doing individual things. I have a low tolerance for risk when it comes to investing. Yes, I take risk when it's necessary, but I don't particularly like picking out individual stocks. I'm still trying to, talk myself into investing into cryptocurrency. And so I don't like volatility, right? And so with a target date fund, it helps to release a lot of that volatility or that worry about that risk. With investing, there's always going to be risk. There is no, I'm going to do this because of past performance. Past performance is not an indicator of future, occurrences. So if you have a low tolerance for risk, a target date fund is a great entry point to start getting your feet wet in the investing world and, getting used to the ups and downs, because target date funds can take losses as well, right? The market can do whatever it wants, but it's really crucial and important that if you especially are investing for retirement, that you kind of just ride the wave, because that's what the market does. And the last reason you might want to consider investing in a target date fund is if you are what we call a lazy investor, and there's no harm, no foul in that. We can also call you a hands-off investor, which is, I like to consider myself a hands-off investor for the most part as well. And so, like I said, a target date fund does the rebalancing itself. So if you do not want to rebalance your own portfolio, you don't want to take the time to really look into that, then a target date fund is for you, for the people who like to be the lazy, hands-off investors. Again, lazy being used as a term of love in this situation. This is something you definitely want to consider. Target date funds are not just a cookie cutter one, size fits all. So when you think about target date fund, don't think they're the same every single place that you're going to open them. Like I said, a Vanguard target date fund is going to be different from a Fidelity target date fund, even if they're set up for the same retirement year. Some target date funds are actively managed. If you don't know what that means, I definitely suggest going to my, investing 101 terminology, right? Let's get this vocab up. Okay, so some are actively managed, and you really, really, really want to pay attention, especially if you are a socially conscious investor, that the target date fund that you are investing is not investing in companies that you do not stand behind. So that is another thing. I always say that, make sure that you're investing into things that you believe in. And we've reached the end of another video. I will catch you in the next one, y'all. Bye.